I would like to say that this is a particularly exciting topic. Shipping is a capital-intensive industry, depending on bank financing. And I think bank financing today is changing quite significantly under the current conditions, geopolitical threats. Please come and geopolitical threats, interest rate volatility, and also ship owners who are making a lot of money and they're not maybe in need of as much debt financing as before. So please guide us through. Thank you.
Well, thank you, Nicholas, and thank you to Capital Link for having us. Well, let me start with a warm welcome to all these gentlemen up here. It's great to have you all here, and I would also like each of you to give just a very brief introduction of who you are and what you do in your professional life. But to start off with, we have a pretty challenging task because we're going to talk about the challenges of ship finance adapting to the new landscape, and that is particularly the geopolitical landscape and, of course, the green transition or transition towards sustainability. But also, I think we touched on that in the panel before, transition probably towards more collaboration among stakeholders in the industry. And just focusing on all this from a ship financier's point of view. And we have just one, I was about to say black sheep among these gentlemen, who is not really a finance man, but probably we'll start with Klaus to introduce, but then Jan-Henrik, it's your turn.
Okay. Thank you very much. Great to be here in Hamburg. This feels a bit like one of those press conferences after a soccer match, sitting in front of the bottles. My name is Klaus Schmidberger. I'm with KfW IPEX-Bank. I'm at the bank for the last 15 years, and 9 years of that I've been in shipping industry, maritime industries we call it. I just came back from Singapore, where I was leading the Asia-Pacific origination activities, and now I'm back in Frankfurt since early this year, covering the German and the Dutch markets, and it's great to be here in Hamburg. I have a very close relationship to Hamburg. My wife was born here. I have to say it's the greatest city. And I'm looking forward to meet you all and be part of this panel.
Good, I'm the black sheep on the panel, thanks a lot. Jan-Henrik Hübner from DNV, obviously not a ship financier other than the gentleman at my side, but in charge for what we call shipping advisory and working a lot at the interface between ship financing banks and ship owners. Being on the Poseidon principles or sustainable finance and so on, there's a lot to do these days. So that's probably why I've been invited here too as a black sheep, yeah.
Thanks.
Martijn Vertel, CIT Bank. I'm a little black sheep because I'm a Hollander. CIT Bank, US bank with a modest ship finance portfolio. We try to lend as much money to German owners, European owners, US owners. Been in ship finance for almost 24 years. A few ex-bosses sitting in the audience, so I better perform.
Hello, my name is Rehder. I am Vice President at BoComm Leasing, one of the bigger leasing houses in China. We have today a shipping portfolio of about 15 billion with 430 vessels. We're active across all segments, and I myself focus very much on the European market, where we work on the one hand with ship owners, but most of all a lot with industrial companies and basically the end users that are looking at decarbonizing the industry.
Yeah, Philipp Wünschmann, heading the shipping activities at Berenberg, and I'm very happy that we have such a conference here. And I think if we talk about adaptation, there might be the first adaptation here is that we have a content conference within the IPEX-Bank week in Hamburg, which is a great thing. thanks to Nicholas.
Yeah, now let's jump right into it. And I think first I would like to start with the geopolitical challenges. And I would like to ask Martijn and Philipp, I'll probably start with Martijn. I think we all agree that the geopolitical challenges are really, really big for the industry out there. The financiers usually are probably a step behind that. But how would you say, what are the major effects you've seen as a bank so far on that side? And how are you adapting, and how have you adapted so far?
Yeah, thanks for the question. I immediately wrote down where you said geopolitical, both Russia and China, and one is an issue and the other is an opportunity, actually. As a US institution, we are quite strict on sanctions language, always have been, and all the sanctions on Russia is definitely something that now plays into what client to choose, how strict you're going to be on your loan agreements. It is definitely on the forefront of our lending, always has been, and that doesn't make it easier. So there's a lot of monitoring we do, close contact obviously with our clients, knowing what their trade is. For us, it was, again, being a US institution, was a bit more on the forefront. We were not as relaxed, I think, as the European lenders were. And I say were because I think they now all play catch-up very fast. On the other hand, geopolitics is also an opportunity. When it comes to China, all of a sudden everybody is aware of what sanctions can do. And I'm having my colleague sitting left to me. There's an opportunity of refinancing Chinese leases. There's a lot of owners that are reconsidering their exposure to Chinese financing, not only from a monetary point of view. I mean, maybe cheaper to finance on this side of the globe again, but also, okay, what if something happens? Then my ship is owned by a Chinese lessor, and they may still be friendly to me, which I suspect, but regulations may just forbid, yada, 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 yada. You don't know what you don't know. So geopolitics, both a worry and an opportunity, in my view.
Okay, thanks, Philipp.
Yeah, as you know, for us, shipping and banking always means basically three areas. It's obviously ship finance, as you know, but it's also about banking services as a second area, and last but not least, investment. So if I look at the three areas of activities, I would say the banking services were most hit or most impacted by the Russian war in Ukraine. And probably this took us or kept us busy this year heavily. As you know, we as banks support you being able to safely and transact, basically, so make payments throughout the world, which is at the basis of your activities. And it was a big challenge, and it came from a case-by-case assessment earlier this year when the war started. Basically, we cared about seafarers and things. And then turned out to look into KYC. Do we have Russian or Russian-backed structures? And it ended up now in talking about cargo and understanding as a bank what kind of cargo is transported around the world by our clients. And I think from that adapting point of view, we adapted in the sense that we, by the summer, figured out that case by case is not possible if you service like 70,000 payments a month for shipping clients. Yeah, that is simply not possible anymore. So we put out a clear guideline and basically no Russia anymore. And for us, that means the exceptions, which we still look at from that point of view, are obviously paying seafarers, It's grain transport from Russia, which is still something which we would consider. And the third area are claim handling of claims which P&I clubs also might have. These are the three areas which we would look at carefully and case by case. For the rest, we tell our clients, be careful, because it's a major and infinite reputational and legal risk for most of them. So that's a very clear position we take there. I agree with Martijn. China is kind of an opportunity on the financing side, where Russia doesn't play a role for us. But also there, obviously, China is also something which we, and this is then coming to the investment side, we hear more and more investors asking questions about China, and this consideration of having it as an opportunity at the same time is a risk for which investors backing our ship financing activities, for example, or considering investments into vessels, new buildings, might have on their radar stronger than before.
Mm-hmm. And from the to all of you probably, the question, from the geopolitical situation, it follows obviously that we may have an increase, or that we may increase certain capacities more than others. So strategy-wise, would you look into some segments more closer than into others, or don't you think that we are there yet to assess that on a sort of mid-term, long-term run? Probably, Carl, you're looking at me that.
Yeah, thank you. No, maybe I can start by picking up two of Martijn's and Philipp's point, who have been putting me on the wall here. I think there's two elements here. On the one hand, you have the element that you mentioned, Martijn, with the paybacks that may occur in the market, and you have the element of geopolitical risk when it comes to Chinese financings. And I wouldn't necessarily say that as of today they are correlated, because if you look at the paybacks that you may see with some Chinese leasing houses, then it's something you see across the finance industry for the clients that we have, because many of our clients have been putting up those financing structures in the past 5-6 years, and basically going through this substantial bull market of the past 2.5 years have generated sufficient capital to say, either I can refinance in a better way, or I just have today the means of taking this financing out. And that's something we have seen across all segments, but I mean, quite prominently, for instance, in the container segment. Yeah? Now, to the second point of the concern when it comes to geopolitics and Chinese finance, I think that clearly has been present in the market, but it's something that we have been seeing for a longer time as well. It's not as if it would only have appeared this year. We work a lot with the charterers, with the end users of this industry, and the geopolitical aspect is now very present here in Europe. It's been very present before. I mean, think of Australia, where many of the miners are based, for instance. Yeah? Those are people that have always had this concern about the political implication of, say, for instance, sanctions that may appear that would interdict trading. And that's something that we have been addressing in our documentation quite actively, in a way that we need to provide our client, obviously, with a way out of the contracts if there is contradictory sanctions that would not allow us to trade the vessels with them any longer. And I think that's quite an important point. And maybe finally, to come back to your question, is there certain segments that we are more focused on than others at this point in time? Well, we are active across all segments. Of course, if you want to go through all of them, then it's going to take a bunch of time. But of course, the energy markets provide many, many opportunities, and we see the willingness of industrial companies to provide much longer coverage than they used to. And this is an opportunity that we see today in the market. Looking into the container side, this is obviously slowing down a bit right now. The bulk markets are quite interesting these days. Now, on a more general note, we all face the issue that new building values are very high, and values across the board are extremely high, and that's something that is not always easy to address as a leasing house that we are.
Okay. Anyone of a different view, like already taking a turn in strategy as to certain segments among you? Not really. No? No. Okay, then I would say we would look at the next challenge, and that is the environmental challenge. And I mean, that has been around for years, we can say now. Well, last year at Capital Link, I think the panelists were more or less of the opinion, or like on the finance panel of the opinion, well, all this has to be in the end demand driven. So at the very last step, the consumer demand, but the shipper demand, and then demanding from the owners the transition into green. We have, of course, regulatory steps right in front of us. We have the CII and EEXI introduction as of January. We have the emission trading probably in 24. As we see it, but is this still common grounds that you would say, and I think this has been, Carl has mentioned that before, that this may be an industry-driven and industry demand-driven issue. Would you still support that, Carl?
I would, yes, clearly. I mean, from the experience that I myself have in the market that I'm covering, which is mostly European markets, where there is a lot of end users that we cooperate with, then you clearly see that those are closer to the end customer. They're typically companies that are more public or more in the spotlight than the shipping industry is, and they feel more of societal pressure to decarbonize. And this is something that then basically trickles down to what we finance, because if you want, so the baseline of their cargo needs is something they're willing to cover and to take on their own balance sheet. And this is where we come in with our leasing structures, and where we typically come in at the point in time where they finance the vessels that they're going to need for the next 10, 12, 15 years. And those would, of course, then be vessels that are fit for this and that feature all the, or depending on their view, alternative fuels or any other technology that would make these vessels greener.
Klaus, KfW has been involved in sustainability-linked finance and green finance rather early in the process compared to other German banks, I would say. But would you say that your main focus is really on sustainability, at least sustainability-linked finance, or would you say that you're still looking at conventional propulsions, conventional vessels? What would be this percentage?
Yeah, well, we as KfW IPEX, we first of all, we finance like propulsion agnostic, but it has to be state of the art, let's say. Like of course we can still we focus on green and clean propulsions, but of course we have to finance what is there, what is ordered. We cannot take this decision on ourselves and push any owner to take this decision in what we have in mind. So as long as we can do, we do conventional propulsions, but of course we look for the, what's the strategy, the sustainability strategy of the owner? Is this like part of his transition towards maybe a greener future? And if we see the actual strategy on that, we take this into consideration and take this into account when we look at the whole project and assess it. It's not only return and profit oriented, it's also we want to see, okay, where's the sustainability link in that order? We started in 2012, I think, looking at EEDI. So every new project that we take on, our financings have to fulfill this EEDI, or we compare it. Okay, where does it, how does it look compared to the fleet that's on the water at the moment? And I think this has been our strategy since then. And now, we signed Poseidon principles, so we also look into the performance, not only the EEDI, and going forward, definitely the sustainability aspect will become more and more important, not only just profit and volumes as conventional banking monitoring, I think, was in the past. It will be more and more, again, impact monitoring as well. Like, okay, what's the impact of our financing? What's the impact of what we do here as a bank? And here, sustainability is, this will be, I think, integrated into our DNA if it's not already there. Yeah.
Well, this leads over to Jan-Henrik and his rather advisory work and also, of course, reporting and monitoring related. So what would you say are the sort of main KPIs or main criteria you see that, or you would advise also your clients, they should integrate into their business, into their reporting requirements? And yeah, probably we start with that.
Good. Carolin, you mentioned earlier on the regulation, EEXI, CII, EU ETS coming, and I subscribe to Carl's comment that markets are ahead of regulators. Poseidon principles have a perspective down to 2050. CII has a perspective down to 2026. I mean, planning in 5-year horizons doesn't bring us near to decarbonization. So I also would vote that regulators take a longer term perspective, of course. EEDI or EEXI, let's say, was a good thing at its time. Those days when you implemented the EEDI, it was the most commonly accepted indicator. It was a design indicator, which, in all honesty, now, as we see it with the EEXI, which is quite similar, tells us hardly anything about the actual emission of the vessel. The EEXI regulation may have reduced or may lead to a reduction of emissions by 1 or 2%, as we modeled in a large number of vessels, because the speed loss you have with that applies only in very few percent of your historic trade patterns. So basically, EEXI is surely not the one which helps us there, even though in the EU taxonomy, the EEDI or EEXI is part of it. We have to look at operational indicators, so basically the AER or the EEOI. For me, both equally important or equally relevant. The AER actually is the indicator behind the CII of the IMO, and from my perspective, the AER has come because banks have introduced Poseidon principles. It didn't come from the regulators, it came from the industry that we have that now. And that's an indicator which is measuring the actual, or as people say, operational CO2 emissions. So that's for sure needed. Your question was what KPIs would we recommend in sustainable finance? I mean, first we would differentiate what is green, sustainability linked and transition. And of course for green, there are different standards. The EU taxonomy has evolved lately. CBI shipping criteria are there which look at AER or EEOI. And then there's sustainability linked, and then where the borrower can basically propose or choose a sustainable performance target or a certain KPI. And there, of course, we would require a CO2 related KPI in there, so either AER or EEOI. There can be additional indicators, a secondary, whatever, lost time incidents or others, but I think there would be no sustainability-linked finance in shipping without AER or EEOI.
Mm-hmm. Okay, and you mentioned, of course, the Poseidon principles, but that those, or at least the sort of agreement of the banks on the Poseidon principles sort of drove a little bit the regulatory process here. Would you see that this is further accelerated, that there is further standardization around the corner, probably industry-driven, not so much regulatory-driven?
Yeah, it goes hand in hand. I mean, there's also some challenges with the trajectories of Poseidon principles, obviously, with the size classes, for example, and the discussion, which is a discussion among the Poseidon banks and insurances. But also in IMO, is the current regulation basically strict enough? Will it lead us to Paris alignment to 1.5 degrees? I mean, I guess majority of people would say no. And therefore also in Poseidon there's a discussion to change the trajectories, either keeping the same logic with the size classes and so on, or leaving that. That may lead to an alignment with the logic behind the CII. So there's development there on both sides, on the market-driven side as well as on the regulatory side. But again, I want to give my vote. Please, regulators, and please, industry associations, don't decide something with a 5-year horizon, because if investors want to invest in something, they need certainty, and it's not certainty if you have certainty on the regulation for 5 years, which is basically 20% of a vessel's lifetime. There needs to be a clear, visible regulation down to 2050. There needs to be, some more certainty on CO2 prices down to 2050. I mean, currently we have 80. We could make we could ask the audience what they think will be the average CO2 price in the 2030s and in the 2040s, but I think we could bet that, a new build now will see a lifetime average CO2 price of 150 to 200, something like this, which will of course enable far more measures being implemented in an economical way than now. But already now, sorry to speak that long, many of the measures, you could probably achieve like 20% reduction compared to today's level based on measures which have negative abatement cost, so which would pay back already at today's CO2 prices, or even if we wouldn't have any CO2 price, all this bow retrofit, propeller, PID, variable frequency drive, and so on. This all pays off for vessels in the retrofit case even, and of course even more in a new build case.
Talking about retrofit, I think last week we've seen the German Environmental Award being given to the Becker-Mewis-Duct. If we look at retrofit and retrofit finance, I understand KfW, you have had some projects on retrofit finance. You've supported retrofits for a couple of years already. What would be sort of your most plastic example, probably where it probably also pays off for mid-sized ship owners to?
Retrofit financing has been with us, I think, early as of 2014-15ish. We did a large project, propeller retrofit for a large liner, exported propellers from MMG and then the challenge is always when you put supplies on an existing vessel, how to finance it without touching the existing structure, without touching the existing financing and getting into the ways of the securities and so on. So
the 100 vessels that these propellers were dedicated were not all financed by KfW?
No. We just financed
the
pure propellers on a corporate basis, and then we got the backing from an ECA. That was quite so we could manage to work around the existing securitization structure and make this a really successful project. I don't know, the savings were substantial, and I think it paid off within much shorter than the actual tenor of the loan. And then with this, what made it possible is one propeller would not make sense for us to look at, because we just have to be efficient with our allocation of resources, but packaging is the key. So you need a couple of those items. The more expensive, the easier you reach the threshold. So we copied that more or less with the scrubbers, and in the advent of 2020, IMO 2020, we did that. We did it with gas conversion, and going forward, I see many opportunities for this, wind sails, technologies, other, anything you could retrofit on a vessel, I think, can be financed with this kind of structure, and we're very open to look at these kind of projects. What it needs is, packaging. We can some sort of alternative security. Maybe an unencumbered vessel can do it. We also did that with the scrubbers back then. And I think this is one measurement, and that's a low-hanging fruit, I would say. If you go into the dock, fix that up, and then you have maybe 5 to 10, 20%. I don't know what's in it at the moment. And with bunker prices as we see it today, I think the payback is quite attractive.
Okay, thanks. Martijn and Philipp, would you think that it is true that if we say last year or the year before, we still discussed in how far sustainability would actually lead to an effect in pricing? So the more sustainable behavior a ship owner shows, the better the pricing. Would you say that this is still true and will be true within the next 3-5 years? Or would you rather say it's a yes and no whether capital will be provided?
We have the lowest pricing anyway, so I wouldn't know. No, joking aside, it is not that black and white. So I've been listening to these very inspiring stories here. From where we sit, we follow the economics. And we're a little further down in the food chain. We're not ahead on determining regulations, because we're not as smart as you. And we're not up in the food chain because we're close to the yards, and we really have big owners that can make a difference. So where we are lower in the food chain, economics work. And then it is two things are very simple when we do a loan. Is how long can we give it for? So what is the economic life of a ship? And what is the assumed income for the ship? Both are impacted by greener regulation. So if your propulsion is more economic, so you burn less fuel, your net rate, what you can earn, will just be better, so that allows us to give you better financing, more money. If your vessel is more modern, we can give it a longer economic life, therefore a longer loan. You get more money, or you have to pay it back over a longer period, which lowers your break even. So these two very simple parameters of ship finance are a direct result from how modern is the ship, how efficient is the ship, so basically how green is the ship, because it's all about burning fuel in the end. So that is how these regulations impact our behavior in terms of what we can finance and what will be economically and therefore environmentally obsolete sooner than anything else. I think that's how we view it.
Jan-Henrik has...
And regrettably, obviously, the, let's say, transformation factor. If you finance the propellers for a liner, that's somewhat easy. They pay the fuel themselves. If we have tonnage providers, obviously it's different. And there we need to come to more agreement between both parties, how to share the benefits of these retrofits, but also in the light of CII regulation coming, in the light of EU ETS regulation coming. I think on the CII side, there's more an obligation on the owner to meet it. On the ETS side, it's more an obligation on the charterer to provide the certificates in the end. So there needs to be more collaboration than it was, or than we sense currently in the market.
Yeah. Philipp,
with regard to our markets, you know that we very much focus on conventional second-hand tonnage so far, and this is for us our contribution to the transition period we are entering in. And in these markets, and this is very much still a private market thing rather than the public markets where this sustainability-linked finance or green finance has already arrived in a way. We don't see too much of let's say pricing differentials or elements of that in these conventional asset-based financing markets for second-hand tonnage. But I expect this, and I think we have entered a phase of becoming concrete now. I think we are here, sitting here, while we're sitting here, we are preparing ourselves for being able to offer something to our clients, which is also giving a kind of bonus-malus system. But obviously the precondition for that is that we have something which we can all agree on with regard to objective kind of KPIs. Yeah? And this is CII, EXI. On the E side, for the S and the G, okay, it's a bit more difficult. But we have decided as Berenberg to develop our own ESG scoring, kind of, and this will sooner or later be integrated in our risk assessment credit application process. And the moment we have that, we are able also to allocate a certain pricing element to this. So this is from within the bank and the industry. The other side, obviously, is the regulator, and don't forget that so far it is not a regulation in place, in force, where banks or investors have to allocate more equity if they do lend or invest non-green or green. But I think only just to come soon, we will see that. And we see that also, just the last example from the investor side, if a life insurance company which might invest in our shipping debt, they put out green policies to their end users, and they are now asked by the regulator to not only put out green policies, but also to allocate the green investments to that, so that really you have something which is green. And that is a huge challenge, but will immediately impact their way to look at things, and they want then to have also a bonus-malus system on that. So I think we will see that, and pace is accelerating in the next 2 years. This is my concrete bet on that.
Yeah, acceleration is probably the word, because we're coming to an end, and I would like each of you to just give a very brief outlook where you would see us in about 5 to 7 years' time in terms of whether things will accelerate, whether there will be more collaboration among stakeholders. We've heard that from the panel just before us, that there may be more collaboration needed, that there may be needed also a socialization or democratization of costs associated with this transformation process. So if we start with Klaus and then work our way back to Philipp again.
Yeah, the famous crystal ball question also on this panel. I think we will definitely see more collaboration, as we need more collaboration when it comes to the implementation of, for example, alternative fuels. They won't come up by themselves. They need the clear regulation that provides investment decisions less uncertain, so more certainty on that. I think we will see a higher mix of energy sources, as has been said before also on the stage. And I think we will also see from the capital side, I think more mix or collaboration from different kinds of pockets of capital. Mm-hmm. So there's not only the new building, there's also, there's secondhand, there's retrofit. There are certain specialists provide certain special sorts of capital to these investment sources. Yeah.
Thank you.
As acceleration, I think, is a change in speed. I would say rather acceleration 0, but good speed continuing. Yes, we've seen quite some changes over the last 3-4 years, and if we continue with that speed, that will be quite good. I think there's more or less a consensus, or let's say a vast majority of people would say that we need to come significantly further than we are now. So I think we have to keep that momentum, have to keep that speed. Collaboration, of course, I voted for this collaboration on the owner-charterer side, but also on the implementation of alternative fuels, that will play an even more important role, of course. We've seen the first liner companies engaging in suppliers of synthetic LNG, for example, or collaboration between liners as example, because they are kind of shaping the industry, or companies with big consumption and big balance sheet at least, together with fuel suppliers, together with technology suppliers. They need to jointly shape that. We cannot hope for a small tonnage provider to accelerate the transition, but it needs to be driven by the big ones.
Martijn.
I think this will stay. Whether it will accelerate, I don't know. It will stay the number one topic for many years to come, because now it's all about scale. The ingredients are there to make it a greener propulsion, but how to technically do it and do it on scale. And the container industry has been ordering a lot of ships, but not all of them yet on what needs to be done. That's the nature of the cycle, right? So maybe they were too early, but that's the cycle. And tanker owners and dry bulk owners have largely been on the fence for, what is it going to be? So I think for the next few years, there's still a lot of confusion is not the word, but a lot of uncertainty, what the scale will be, and so the ingredients are there, but still the number one topic for the years to come.
Thanks, Carl.
I think we're right in the middle of it. You have the public and the regulatory pressure that is clearly there. The industry today has the capital needed to decarbonize. I mean, just simply think about what you see in the container industry. Some of them have taken massive funds, for instance, methanol-propelled engines, and this is something they would have been incapable of doing 5 years ago, and clearly the markets helped there. And last but not least, the end users, the charterers, are committing and willing to pay a premium for a greener vessel. And putting all of this together in very practical terms, if I look at my desk today, I would say that 70 to 80% of the projects that are coming across that desk would be considered green, and that is much more than it was 3 years ago.
Yeah, last but not least, I think we will see accelerating challenges, especially in the short term for tanker and bulker financings of second-hand tonnage, because this can be, let's say, more challenging for anything which is regulated institutions. So this might walk out, and good news for private debt funds, as this might be easier for them to finance. So this is one of the immediate things I see, at least challenges ahead. And the other thing to mention, I think, is the whole question of what I would call ESG KYC, which we all have in front of us. We all have survived the KYC elements of the last 10 years in more generally, but I think for ESG, it's kind of the same, and we have to make sure as an industry that we have efficient ways to gather the data we all need to make decisions. And I think this is one of the major topics I see ahead of us.
Well, thank you. I think there are many challenges still out there. We are almost, no, we just missed the time by 1 minute, so we just close. Thank you very much.